Hi, my name is Gunther Glenk. I'm an assistant professor of business at the University of Mannheim. My research focuses on the risks and opportunities of corporate decarbonization. Topics include the accounting for corporate emissions, the cost of decarbonization pathways, and the competitiveness of climate technologies. Companies worldwide have pledged to reduce their greenhouse gas emissions to net zero and begun reporting on their progress towards these pledges. While such efforts have been recognized as crucial in the global effort to mitigate climate change, analysts have argued that current practices in corporate carbon accounting obscure the actual emissions of firms. So our work seeks to develop solutions that make corporate carbon accounting an effective tool in combating climate change. That is, we seek to develop and evaluate generally acceptable carbon accounting principles, and so such principles should enable companies to faithfully represent their actual emissions and provide them with incentives for real decarbonization. The Greenhouse Gas Protocol is a framework companies around the world use to determine and report their emissions today. This framework includes overarching objectives, principles for conceptual guidance, and procedures for determining key outcome variables. But it lacks core features of an accounting system, essentially limiting the usefulness of the resulting information for managers, investors, and the general public. The Greenhouse Gas Protocol lacks a few items. One is proper definitions of the purpose and the elements of corporate carbon accounting. That results in the objectives and the principles and the procedures we just named being somewhat vague and incoherent. The framework also establishes no clear attribution of emissions to firms, leading to firms along the value chain estimating and reporting the same emissions multiple times. In addition, the Greenhouse Gas Protocol also does not properly distinguish between actual and estimated, as well as past and future emissions. Well, that causes companies to aggregate different emissions, which then obscures a firm's emissions. And in addition, the Greenhouse Gas Protocol grants companies considerable discretion in selecting parameters for calculating their emissions, right? Often resulting then in the reported emissions being somewhat biased, incomplete, and difficult to compare. Our work now builds on the Greenhouse Gas Protocol and financial accounting standards to propose how companies should measure and report their emissions so that the resulting information is useful to stakeholders. Central to this work is to combine measurement approaches from environmental science with accounting rules from financial accounting. And this should facilitate that the resulting carbon accounting principles will be consistent with climate science and provide useful information to stakeholders. Because our work builds on the Greenhouse Gas Protocol, companies will be able to adopt our suggestions and remain compliant with the current version of the Greenhouse Gas Protocol. In other words, companies should find it less costly to prepare their emissions, while they also improve the quality of their reported emissions.